Hey, it's Tim. It's about 9:30, and we're seeing global markets rebound a little bit this morning. Better factory orders in Germany, led by foreign demand. Domestic demand not terrible. Rio Tinto has reported numbers. EBITDA has tripled. CapEx will go up 50%. Tom Albanese has indicated that he expects demand in China to continue, although 11 to 12% Chinese growth probably not sustainable, 8 to 9 for sure, and for them that's very bullish. So global miners around the world have spent a lot of the last week, both in earnings at Norilsk Nickel and an operational update, comments by BHP. You've had this general sense that people have overpriced in a dramatic fall off in global demand. To me, we're at a place where the dollar's weakness, despite a bounce yesterday on the 200 moving day, is very bullish for commodities and will continue a trend where actually inflationary trends are going to be the more dominant element, not deflationary trends. And there's people lining up aggressively on both sides. Emerging is last night Asia was weaker. China A shares down 67 bips. India is a market we're watching to see for a bit of a pullback after what's been a fantastic run, especially in the Indian banks, highlighting IDB, IBN, HDB, excuse me, and we've got a number of names in the tech space which may actually be the more interesting place. They've typically traded more expensive. We'll have a look on that. Russia's down about 60 bips this morning. The rage is still to talk about the wheat drought, the fires in Russia, and this morning they've actually agreed to cut all exports into the wheat market, which is putting a bid on prices in the ag space, the softs and the fertilizers around the world. And Russian exports, which at their peak are somewhere around 18 million tons, are predicted to possibly fall all the way down to about 9 million tons. Will that put a deficit in the total supply-demand balance? Yeah, I think it will. And I don't think, though, it's going to lead you to a place where you're going to see grain shortages per se, but it's absolutely going to keep a bid in prices here. So I think those trades continue to work for you. Jobless claims this morning in the U.S. were not very good, ahead of the payroll number tomorrow, which is, as always, very important for litmus tests for the U.S. consumer, the global consumer. We'll watch that, but again, today's numbers weren't particularly strong. That's your themes, and I think you can still expect oil to hold this $80 level. With that, in the emerging world, you've got a couple important concepts that Russia, Brazil, Peru, Colombia, the places that are commodity rich are going to continue to do very well here. The places that are importers, net importers of energy, are going to struggle with their inflation, and that includes China, where we will get an inflation number later on in the month that people will be watching very closely for indications as to where the next policy move is. That's it from here.